got in at if it were above $2 or the high price. So because I was counting on that for something. Obviously, it was their savings or their retirement. Well, that's not a bad argument. I can't fault you for having it, but I sort of would pose the question, who among us in the population will turn over the assets of their homes, their pension fund, their bank accounts to their fellow citizens to make them more whole? I don't see a long line out here in front of the Capitol. They haven't shown up for this testimony to suggest that they're willing to provide their fair share of your loss, and I doubt that they will. Our system and our decision, seems to me, will go to the question of, is it intended to have a system that has no risk? And that may not be the worst system in the world, but if we are that, then we really shouldn't have pension funds with investment advisors. We should have a governmental pension fund that you pay in, and somebody maybe lends that money to the United States government at a guaranteed rate. You get very little upside, but you get very little downside. If you want to get the advantage of, in the capitalist system, in the free market system, of the extraordinary upside, there are risks to the market. You may say, but we didn't lose our money in the market. We lost it to a fraud. That's part of the market. I mean, coffee at emptor is still a principle of law, I believe, Professor. And it may be vicious. It may be because you didn't even understand or know who was investing your money. But there's no way in the world that you can say it was the government's responsibility. Our system doesn't say that. Our system says it's each individual's responsibility to do and protect their assets as they will. I mean, I was here when the Enron disaster occurred, and their people had invested their life savings in their 401ks that absolutely disappeared almost overnight to the tunes of hundreds, if not millions of dollars, and we were all sorry for them, but they had to take their licks. That was the problem. That's our system. Not the best. Well, I still think it's the best system in the world. Not a good system if you're on the losing side. If you're on the winning side, it is absolutely the best that was ever constructed. Our problem is, how do we lessen the impact on everyone? Well, we just can't, it seems to me, guarantee everybody is insured or everybody is guaranteed their return. I don't know how we do it. I don't see how our system would afford that opportunity. If we were to tax the payment of the loss of $14 trillion in capital just for the last recession, what would it be per head? There's a mathematician on the board. It would be extraordinary, the amount of dollars every individual American would have to come up with to make some of our fellow citizens whole. Probably all of us have lost in some way. You, in particular, have lost a great deal. There isn't any question about it. Now, what do? We have done several things. We've now provided changes in the Investor Protection Act that will require certain actions to go more in depth, that we have a chain of command, that the information will go up the information ladder and the leadership ladder at the SEC. All of those things are future legislation, help future things. There's not an awful lot in there that's going to help your cause. Can we come up with some equitable position, going particularly to Mr. Maffei's witness, the pension fund? You know, that's a tough situation, but if we were to honor $500,000 per pension member of the pension fund, we'd soon end the guarantee corporation. We just don't have the funds in there to do it. I don't think that was ever the intent. I think we probably have to have much more lively, and I think it'll result probably from the experience that we've all had. We have to have closer eyes on the subject. We do force pension funds to do certain things with the assumption they'll be able to carry them out correctly, and they probably can't in certain instances. Those individuals that didn't know that Madoff even had a touch on your funds, it's a tragic thing, but it is the responsibility of each individual to find out. I'll leave with this. My time has expired. But if you think in terms of real estate, You know, you can go out and buy a $500,000 home, and you can buy it from your lawyer, your doctor, your minister, your priest, your rabbi, or your friend. And if you're not smart enough or clever enough or sensitized enough to have it searched out that that individual has title to your home, and you buy the home and you pay your money, and then you find out that the person that purported to be the owner didn't own it, I've got news for you. You lost it. You can't sue the government. You can't hold anybody else responsible. You've got to search out the ownership and title. What difference is that in a pension fund in terms of who's handling the pension fund, who's making the investment? It's really the same policy. Certainly our hearts go out to someone who pays $500,000 for a home that they don't own and can't live in, as our hearts go out to those people who lose their life savings because of a fraud perpetrated by someone who appeared to have all the indicia of respectability. But the federal law doesn't provide that because you have to register with the SEC, and the SEC is supposed to test out and investigate. It doesn't say that it guarantees that it has or that it's eliminated all frauds. It's just we cannot afford to do that. In some respects, if you look back historically, it's a hell of a lot better today than it was in 1929. I hope it's going to be a lot better tomorrow when we pass the new reform regulatory bills than it was a year ago. But it's not going to be perfect. We're not going to accomplish that end, and those of us that have that desire or wish are going to be grossly disappointed. I'm not going to ask any particular questions because I've exhausted my time, but we wanted to have this hearing today because so many of the fellow members of the committee have expressed their thoughts on the subject of the losses of their constituents they've suffered. They are looking for a remedy, and the commitment as chairman of the subcommittee that I've made to them is we're going to work as hard as we can to close some of the holes, some of the weaknesses in the system. But I just want to caution you, we're not going to solve and create a perfect system. You're not going to be happy with the end result because the possibilities and the exposures to the government and to the people are far above what we can possibly provide as protection for it. So we'll work toward getting equity and fairness. As a law professor will tell you, there ain't no equity, there's no complete fairness in this world. It's a tough world. The gentleman from New Jersey, Mr. Garrett.
Thank you. There may not agree there will be fairness. What we can try to do, I guess, from the government's perspective is to make sure that there is justice. However, no. You'll use up my time. We need to strive in order to get justice. And I do agree that at the beginning of the day that everyone should be held accountable for executing their own due diligence in their investments, right? And part of that due diligence, as Professor Coffey would say, changes from who you are. If you're the proverbial little old lady at one level, conversely, the union official who might have more resources than the little old lady would be at a slightly different level, to a fund of some sort or an association somewhere in between of those. So the level of due diligence is going to be vary, but we do expect in this country that everyone exercises due diligence. And to the extent then that due diligence doesn't work out as far as investments going up and down, that is your responsibility. Added to that, however, is when that due diligence is in reliance on the government in certain areas, then that is a responsibility of the government to come forward. So when you do your due diligence, Ms. Chaitman saying, looking into the SEC, has the SEC done their job? Well, you are appropriately relying on the SEC to do their job. And when you look to, that's before the fact, right? When after the fact, you should be able to look to SIPC to do their job because they are quasi-government entities. See, this is the whole issue, and let's say this for 30 seconds, that we're doing. There's a bill on the floor this week, today and tomorrow, which in essence does what occurred here. It creates what I'll call a moral hazard, if you will, by relying on the government, as you did, because the government says, we're going to protect you with the SEC. And so you have a right then to rely on that. Maybe you would have done more due diligence if it wasn't out there, but we told you you can rely on it. So you did, and that's right, you should. Also, we set up the SIPC and said you can rely on it, and you did. Had we never set those things up, you may have made other investments or made other decisions. But because we set those entities up, now we've created a different investment strategy, a decision is what we call moral hazard. And the bill that we're going to be voting on, just for your information, today and tomorrow, expands those involvements or intrusions or activities by the government. So you'll in the future maybe even say, I can be more reliant on the government and less due diligence, which I think is not a good thing. For example, one of the comments from one of the people that I entered into the record said, with regard to clawbacks, and let's do a quick hands if I understood the testimony, everyone except for Mr. Coffey on this panel believes that we should not have clawbacks. Is that correct? If you're in favor of clawbacks, potentially, in any one shape, form, or another, is Mr. Coffey. Okay, and I understand that. But one of the testimonies was, or the letter that I entered into record from a gentlelady from Bergenfield said, indeed, any clawbacks, if we're going to have them, should begin with the SEC and clawing back from the SEC because you were in reliance upon them, and maybe we should be clawing back from them. And that's why I gave my opening comments that we're not asking much from them in the bill that's passing tomorrow. In fact, we're doubling their salary and their appropriations and their authorization and saying, hopefully in the future you'll make some changes, but we're going to increase it. So you might just want to take a look at what's coming down on the floor tomorrow and today, because we're really not asking for those things. What I think we should be. We should be holding them accountable for what they did wrong in the past and holding the people particularly accountable for the failures that they made. And before we give them any more money, we should be making sure that they make some changes. Now, Mr. Chaitman, you said, just to get into the weeds on one little, not a little point, but one point in some of the material you supplied us with, you said that the trustee, correct me if I'm wrong, the trustee and SIPC are running administrative expenses of approximately $100 million per year. But Mr. Harbeck says in his testimony that the trustees have only paid $1.2 million so far. Can you
Well, I think I can explain
clarify that? Yeah.
Yes, the trustees' legal fees are...
Hit your little button.
I'm sorry. The trustees' legal fees have been approved for the first 15 weeks at the rate of $1 million a week. He then filed an application for another 23 weeks, and he's running again at $1 million a week. So if you project that for a year, it would be $50 million a year. And Mr. Harbeck has said publicly that the non-legal fees, the forensic accountants, et cetera, who are going back through generations to figure out the net investment, which of course is not required by the statute, Mr. Harbeck had said in the press that those expenses are running at the rate of $1 million a week.
Wow. So it's one of those cases, as is typical, and I see my time has come up already, cases where there's almost an incentive for, and I'm not saying that there is, I'm just saying on the face of it, there's an incentive for not things to move at an expedited basis because you have a pretty good fee there that's guaranteed to be paid for the period of time.
There's an inherent conflict of interest in the way the statute is set up.
And if I can I just want to make one statement that we, some of these aspects may have impacts upon getting more fees in, may have impacts upon broker-dealers, of course, right? And we did suggest to SIPMA that they might want to come and testify, or at least be at the hearing today. They declined to do so. So we would certainly like to hear from them at some point in time what they see as the impact, because if we want to do, and I think I'm on board with where most of you are, and Mr. Coffey, I understand if we want to go where you need to do on close on this, we really have to be real tight in that language, because what you don't want to do is to come up with language that, and I'm a lawyer too, has any wiggle room in it, that then you put somebody here on the spot that they even have to go out and go to the aggravation of hiring a lawyer where they really shouldn't have to go through that aggravation. And I think you probably would agree that you're going to be able to draw that line clear enough so that they would not just have mass lawsuits under this thing that would just be very targeted. I would think that that target would be very, very limited as to ones that the government has any evidence whatsoever on that there is or even was potential for collusion, whether it's family members or other business associates or something like that. Is that where you were going on that? Not the charitable organization, well, maybe the charitable, but just for any of the other lawsuits that they would potential. Hit your button, thanks. Button.
I think you could move from the current good faith defense, which is based on a reasonable person,
right,
to more of a recklessness standard that would make it somewhat harder to recover under a fraudulent conveyance statute.
Yeah, you just don't want an overly zealous